Hello there, Mavericks. This is Rob Reinhold. Welcome to the Trading Room. Before we get started, we just have a little bit of a change in scheduling this next week. We're going to be doing payouts on Wednesday instead of Tuesday. It just so happens to land on regular payroll day, so we're going to be paying that out on the 20th. So payout will be Wednesday this week. In this session, we're going to talk about what happened this week. We had a big CPI report and a bigger PPI report, which is pretty rare that the PPI is bigger than the CPI. But we're going to look through everything, and I've got some trades for you.
All trades and analysis in this video are for professional traders only. This video has been released to the public after a delay required by our compliance department. Maverick traders receive this market recap immediately, along with real-time trading support and resources. Maverick Trading is a proprietary trading firm that backs professional stock and options traders with firm capital. Our traders keep 70 to 80% of the profits they generate. If you're ready to become a professional trader, click the apply link in the video description below. Let's break down what happened in the markets today.
All right, let's first off look at the news last week. Okay, we had a bullish market, and I've been talking about how this market is bullish and how it's not likely to change until we get into some seasonality patterns. We are looking to set the first 4-month win streak since 2023. So we're like 2.5 years. This is the longest win streak we've seen in the market. So we are super bullish right now, ultra bullish. Yes, we all know it's going to end sometime. None of us know when it's going to end. So we just need to enjoy it as long as it lasts. And when it changes, we just need to change our trading style. We've been talking about that for the last 2 months. And we've been enjoying it for the last 2 months. It's actually been a really good last couple months. Let's talk about the inflation news. On Tuesday, we got the CPI came in right as expected on the core and the headline number, but the year-over-year number was a little bit less than expected, and the market liked it. The market was really happy about it, and we went up on Wednesday. And then on Thursday, we got a number that was red hot. That PPI came out at 0.9%. It was supposed to come out at 0.2%. That is a really hot number. The market didn't like it, but the market didn't crash. You would think that with this market being so elevated and with it being so bullish, it would crash. No, there were buyers under the market. So when the market pulled back, people were still buying. We did cool off a bit, but that PPI was a big number. And last week we talked about how there was now something like a 98% chance that the Fed was going to cut rates in September. That's actually now dropped to 85%. So it's still pretty much a given, but the bond yields moved back up, and now people are rethinking about whether a September rate cut is a guarantee. One thing I wanted to share with everyone, because I heard this and I said, there's no way that's true. It's actually true. AI spending contributed more to the growth of the economy than consumer spending did. Now, when I first heard that, I thought I heard that they spent more money on AI than all the consumers in America spent the first half of the year. That's not what it was. But what they're saying is, without the AI spending, this economy would be near zero as far as growth. And that what the companies around the world and the US are spending on AI is actually making up for a lack of consumer spending and a pretty lackluster economy underneath it. I thought it was pretty interesting, but it just goes to show that I've had discussions with traders and they say, Rob, I don't get this. The economy's not all that great. You're right. It's not all that great. But when you add in this crazy AI spending, you can still get a pretty decent GDP off of all this activity. And that's exactly what we're seeing. And the markets have been smelling that, and the markets have been sensing that. And that's why this market's gone higher. That yes, the AI spending has masked a weaker economy, but the net result is we have a stronger economy, which means stocks go higher. All right, we already talked about the CPI and the PPI, so let's just finish this out. Retail sales. Retail sales came in a little bit weaker than expected, but they were revised for last month. So all in all, it was not that big of a surprise, and the market really didn't move on it whatsoever. Those numbers, retail sales, are decent numbers. They're good numbers, and last month's revisions were actually great numbers. So again, if you are one of those bears and you're doubting this market, I've been trying to convince you just to go with it. Go with it. And yes, it'll end sometime, but just go with it. Those retail sales numbers hey, you know what? They were pretty good. If any of you have gone out to dinner, there's lines at restaurants. There's people spending. The economy is okay at the moment. So, what does that mean for the market? It can go higher. Dow up 1.5%, S&P up 1%, Qs only up 0.5%. The Russell playing a big amount of catch up. The Russell has underperformed tremendously, so it's playing catch up. Gold down about 2%, oil flat. Let's take a look at this S&P chart. And this is just classic bull market run, rest. Run, pull back, run, rest. Okay, so the only question I have here is this going to be a base or is this going to be a pullback? Like, that's the only question I have as far as what's going to happen, because this is clearly an uptrend. I have no idea when this uptrend is going to end. I'm going to talk about seasonality patterns here in just a second. September 1st is when a lot of these trends end, but guess what? Last year it didn't end. It just kept going. I won't know it's over until it's over. And yes, I will take some losses in those 2 weeks of time. But I don't care, because I've been taking all these gains the entire way up. I just don't care. I'm going to ride this as long as it goes. The markets are just really strong here, and we're at the end of August. I really don't see any reason why we fall in the next 2 weeks. Maybe we're a little tired. Maybe we don't go all that much higher, but I just don't see a lot of weakness coming into this market. All right, here we have the heat map, and you can see, all the big names had a mixed week, but, Google, Meta, Apple, Amazon, that's a big chunk of it. Healthcare, fantastic bounce back in healthcare, best performing sector this last week. So let's talk about next week. Market outlook, stubbornly bullish. You know what? Here we are, late August. Kids are going back to school. People are getting back to the office. Summer vacations are coming to an end. It's not a time where we usually get big moves in the market. August trading for me has always been grinding higher with a couple of big pullbacks in it, but grinding higher by the end of the month. I don't see any reason that changes. Let's talk about bond yields. So we were down to 4.2%. We're now back up to about 4.3%. We're still in the range between 4.2% and 4.6%. If we get up to 4.5%, I think that's going to be a little worrying to the market, but right here, 4.3, they love it. And of course, I've been talking about this, and I'm going to keep talking about it until it either comes to fruition or it doesn't. I am looking at the September 1st seasonality pattern, and I am looking at being pretty bullish until then. So most of my trades are about 2 weeks out. I'm now 2 weeks out for September 1st. Next week, you're going to see I'm going to be playing things a little bit less bullish and playing it closer to more of a neutral, just because I'm preparing for this. I don't want to go bearish, but I just do want to prepare. I'm okay if I miss some gains. I'm totally okay with it, because I want to protect my capital, because this is one of those moments where in the past couple of years, there's been some real nasty falls in September and October, and then rip higher in October. All right, this week, we really only have one bit of important news, and that's mostly going to happen on the weekend, the Jackson Hole Symposium. They have this colored red as like a super important event. The reason that was that back in 2011 or 12, Ben Bernanke used the Jackson Hole Symposium to announce monetary policy. The market wasn't ready for it. The market freaked out, like announcing monetary policy, and then he did it again next year. So now, every year the Jackson Hole Symposium comes together, which is just a collection of central bankers around the world giving talks. Everyone is now super hyper-focused on it, and we haven't had any bit of announcement since then. I think they learned to not announce monetary policy at Jackson Hole Symposium, so I don't think it's that big of a deal. Not a lot on the schedule this week, which means I think this is going to be a pretty quiet week. And in quiet weeks, in late August, do you know what is likely to happen? Markets go a little bit higher. Not much higher, but just a little bit higher. Here we are. We moved to a +3 from a +2 last week. We are clearly in a bullish market. All right, let's go in and take a look at all the sectors. Let's start off with the sector performance. And as I said earlier, healthcare, stellar performer, 4.5%. This was our weakest sector and is now bounced back to be more in the middle. What else did well? Comm services did fantastic. Google, Meta had great weeks this week, which is now, again, a big part of this sector. But take a look outside of that. Consumer. I really liked the consumer sector last week. That did well. And take a look at what worked poorly. Utilities have been one of the strongest sectors of the past 3 weeks. It cooled off, which is fine. This industrials here is telling me a story that it was actually down for the week, and a pretty strong week. We're going to take a look at that chart, and you're going to see that chart has turned dramatically with the rest of the market going higher, and this thing really underperforming. Tech was flat for the week, but again, tech has been, like utilities, one of the strongest sectors. Was it taking a break, or is it an actual reversal and going to fall? Let's go take a look at all the charts, and we will answer that question. So here is utilities. Utilities was very bullish. We came down, had a little bounce, but we just fizzled out here. All right. So now we've got this longer pullback that really has just taken us to the 20-day moving average. Okay, we're at the 20-day moving average at prior support or prior resistance. If it doesn't bounce here, then yeah, it probably is going to be moving lower for a little bit more. But this is typically where things bounce. But we do have to back off from a +3 to a +2 because we are sitting on that 20-day moving average. Coming to comm services that was basing. It was basing. You can see clear breakout. So this has gone from a +1 to a +3. Just nice breakout to the upside. Look, had a big run. Maybe it pulls back or bases for a bit, but this thing is back in the bullish territory. Real estate was a 0, stays a 0, really didn't do anything. Those moving averages totally flat, pancaked on top of each other. That always eats a 0 from me. Then we move to healthcare. Healthcare. We do have moving average stacked, but we're starting to get more movement. And ultimately, you can see here, we moved a little bit below the bottom of the range, but we just came right back up in the range. This is really just range bound here, so we're going to stick with the 0 until we see moving averages steepen and either go up or down. Here is the industrial sector, which was one of my favorite sectors back in May, June, and July. Just looked great. And then you can see ran here, had a pullback, and look at this price action. The market is at new all-time highs. This sector is not participating, which means that if the market falls here, if we do have some selling in the market, this is likely where the selling is going to be the most intense because it didn't bounce with all the strength, which means that there's no buyers there, there's more sellers. This to me is telling me to be wary. This moves to a 0. We'll have to see. Does it go to a -1? But at this point, we're just right between the moving averages that are mostly flat. Financials, they had a big pullback. And it looked pretty messy and sloppy for a bit here. But they did move out of that pullback. Take a look at this Friday candle. That's just a nasty engulfing candle on Friday. It's a +1. I am not super crazy about financials, but definitely much more so than industrials. Here is consumer discretionary, off to the races, up to new highs. This is a +3. There's no question about it. Here we are to the consumer staples, defensive sector. Last week I said I don't want to go to a +1 yet until we break out of this range. And you can see we didn't really break out of the range. We sunk back down in it. Moving averages are flat. We're just going to keep this at a 0. That's just where it was. And until we get some movement out of the highs or lows, we're going to keep it at a 0. All right, tech. Tech was a +3. It was flat this last week, but take a look at it. Tech made a new high, and now we're just having a little pullback. This still remains one of the best sectors out there. But yes, it's in a little bit of a pullback at the moment. Materials, a 0. We were at a -1 last week. We've now recovered, sitting pretty much at moving averages that are flat. That's a 0. And then we have energy, same thing. Sitting at the moving averages, flat moving average, that's going to get a 0. So this is where we were last week. Utilities went from a +3 to a +2, and we had comm services and consumer move up to a +3. three strongest sectors are comm services, consumer, and tech. Very, very cyclical sectors. Industrials and financials simply swap places. That industrials to me looks like it's in a little bit of trouble. And our weakest sectors all got to bump up to a 0. So as you can see here, bunch of stuff at neutral, a few things in the middle, and then clear winners, comm services, consumer, and tech. Here's where we sat last week. We had 5 trades roll off, and after a great month of July or August, kind of fizzled at the end. Out of these 5 trades, 3 ended up being max loss, 1 ended up being a small loss, and 1 ended up being a max gain. So, a little disappointing, but still a great month overall. So the market score has moved to a 3. So that tells us here are the amount of trades we can do in each direction or each strength of direction. And here are the trades in black that are already on. So we're going to be adding -2 in industrials. Now let me talk about this. I'm doing a -2 out to the September monthly options. So this trade is going 5 weeks. This trade is going to be 5 weeks long, and I'm okay with doing it because I'm preparing for that possible sell-off in September. So I might start placing a couple more bearish trades, but I want to give them into September to where the seasonality patterns are there. Putting on a slight bull in financial, a +3 bull in consumer, and a +2 in tech. Again, as you can see, I'm pretty loaded on the bullish side, which I have been. This is going to be the last week I do that, and then I'm going to start moving down. I'm doing a lot of +1, -1 trades until we get into this September period and we can take a look at the market action that's happening in front of us. All right, let's take a look at some of those possible trades. First up is industrials. This is Carrier. They make air conditioning units. And this is one of our favorite patterns at Maverick. And I always called it a first stage downtrend. And I said, that didn't sound cool. That doesn't have a cool name. And so years ago, I said, hey Mavericks, we got to come up with a cool name for this. And we came up with the belly flop. Now, the belly flop is when there was a stock that was in a strong uptrend, and then some bit of news, which was an earnings report, absolutely crushes it. And so it gets this bad news, and then it sits there and bases and has no bounce. No bounce whatsoever. So again, huge uptrend, bad news, it falls, and then it sits there and bases for about a week or two before it ends up falling lower here. So this is definitely going to be a bear, but I'm going out into September. So I'm going to be looking at the September 19th, 60-65 bear put spread. So I'm looking for this thing to be very bearish here. I'm looking for this thing to lose about 10%, about 8% of its value, and I'm giving it a month to do so. This is a fairly aggressive bear. I can't remember the last time we did a -2. It was probably back in April. That was the last time we even had a -2 on. So I'm looking to get a little bit prepared for the September possible sell-off. In financials, I wanted to be a +1. Remember, +1, -1, you don't want crazy movers. You don't want the Teslas, you don't want the Nvidias and the crazy things, because the trades you're putting on don't reward you if the stock goes up a lot. I mean, the fact that you're putting on a +1 trade means you're totally capping your upside. So why play with the volatility? Why mess with that? So I went and looked at boring. And this is what I found. JP Morgan. I don't need this thing to go up. I just need it to not go down. That's really all I need here. So it looks like about 284 is the bottom of the range. 300 is the top of the range. It's close, 2/3 to the way to the bottom area. I'm very happy opening up a spread here on August 29th, 285, 290. So I'm looking to play it right here. So if it ends in the bottom of its range, I'll have a little bit of a loss. If it breaks down below, I'll have max loss. But if we just hang out here or move a little higher, that's going to be max gain for a 2-week trade. If you want to be a little bit more aggressive, okay, give it another week. Go out to the 300 on the bull call spread. Next up, I wanted to be really bullish in consumer. So remember, this is where we do want big movers. we do want something that's going to move. And this here is Amber Sports. This is a Finnish company, I believe. As you can see, big news happened off of an earnings report. It's a big jump here. And look at this consolidation. This consolidation is beautiful. I have no idea when it's going to break out. You can see the moving averages have come up and just flattened out. The stock is kind of pinned here. Slight little uptrend, maybe a little wedge here forming. This is where I don't know when it's going to break out. I don't know when. So, as long as I give it enough time, I actually am really happy just letting it go. This only has monthlies. So again, this is another 5-week trade. If it breaks out and runs, 45 I think is no problem for this thing. If it doesn't break out, I'm going to be a max loss. That's just how these +3 trades go. So this one to me looks like it could have a big run if we get a breakout. All right, next up was tech, +2 in tech. So took a look around and found Affirm. All right, Affirm has been moving up nicely, moving up, basing, breaking out, pulling back. As you can see here, we've got a little bit of an ascending triangle pattern here forming. Maybe it's a base. Okay, whatever one, 71 to 78 is the range. We're trading right up at the top of it. Then I think at 82 strike. So I'm looking at the 78-82 bull call spread just 2 weeks out. I'm not going into September on this. So for me, I need this thing to move right up here. Could it go up to 85? Sure. That's probably where it's headed, but I'm going to be playing it at the 78-82 because I predetermined how bullish I was going to be on this one. Let's go ahead and wrap this up. All right, markets are, I put losing steam, but I shouldn't say losing steam because that gives the wrong picture. Markets are a little extended, a little tired, but when selling comes into the market, there are buyers still there. So you want to be buying the dip. You want to continue to stay bullish. We need to see where the dips don't get bought anymore and the rallies get sold. Once that happens, then we can talk about the markets likely moving lower. But even on Friday, there were some real challenges to the market on Friday. Market held in wonderfully. Same with on Thursday after the PPI report. It hung in wonderfully and bottomed out, about an hour or two after the market opened, and then climbed throughout the rest of the day. Just a slow climb showing you there were buyers still coming into the market. I'm looking to be bullish for the next 2 weeks. After that, I am going to pare back my bullishness. Look, not because of anything I'm seeing in the chart, but just because I want to go into this period fairly neutral. For the last 4 years, I've talked about this. The first 3, we had 10% pullbacks in this period. Last year, we just kept going higher. We kept going higher and I lost out on some gains. I'm totally okay with that for the year. So I'm preparing for it. I have no idea if it's going to happen or not, but it's one of those things I like to be prepared for. Thank you for joining me, everyone. Have a great weekend. Goodbye, everyone.